This conference will now be recorded.
Hello, this is David, CFP professional with Fidelis Financial Strategies. Just wanted to give you a quick market update. First, I'll share a brief idea on this, and then I'll have another video that goes over some proactive tax planning. You can kind of see that the month of September has been ranked as the weakest month for equities over the last 20 years. And that was true for this year as well. The third quarter started strong, companies are making good money. Many large US stocks reported good earnings over the summer, but in September, the S&P 500 and the Dow Jones Industrial Average declined more than 4%, but they still have a positive return for the year. There's a combination of factors that are influencing things. Some major ones are the rising inflation, which is currently, if you average the last 12 months, around 5%. The Fed has talked about tapering off some of the stimulus they've been doing, which may have interest rates go up, and then there's been some monetary policy changes, tax law proposals that are hovering out there, and then of course the COVID-19 concerns. The Fed met in September. They decided to keep the rates low, which means it's a tough time for savers. Interest earned in a guaranteed account, like a savings account, are well below 1% typically, but inflation has averaged over 5%. So that's a real concern because it eats into purchasing power and lifestyle. It's always a good idea for investors to try to at least keep pace or exceed inflation rates. We're keeping an eye on that and any changes that might affect our clients. There you can kind of see some of the natural averages as of October 4th, 0.07 and 0.15 are at that rate without taxes. It would take over 350 years to double your money. That may not get you to the goal you're trying to get to. Fourth quarter has usually been the best quarter for equity markets. However, you need to remember that prior performance never indicates future performance. Four major things to kind of have a grasp to help maintain discipline and direction towards your goals. Internet news or article links are not a good source for your personal investment decisions. Emotional knee-jerk reactions should be avoided when investing. Here's some key takeaways listed here. Keeping an eye on interest rates, inflation, what the Fed's going to do, which will affect savings accounts, borrowed money, and then really just stick to your plan unless you've had a major life change, personal, not what's going on in the news, but personally that would necessitate another visit to change up what we got going on. All that fun disclosure.